Hello and welcome to today's morning report. Chart appraisers with me, Richard Perry, market analyst at Hantec Markets. We have an interesting open to European trading. Equities are lower, despite the fact that Wall Street continues to climb, and Asian markets were higher overnight. I have a few thoughts on that. I'm a little bit concerned that possibly Wall Street is maybe coming towards a bit of an extreme move that could result in a bit of profit taking, and the fact that the European markets are lower today sort of play into that, really, I would say. Let me just show you the board, and we've got the European markets lower, marginally lower across the board. We've also got the dollar, which is mixed, and I say mixed because we've got the yen, which is weaker, commodity currencies which are weaker, and that comes with the oil price, which has fallen back. There. But the euro and sterling are still stronger. Now that is sort of driving a bit of a consolidation in the dollar index, and that comes with treasury yields which have picked up. So there is a degree of support for the dollar today. However, this is an interesting chart that I will be increasingly looking at, and I've been talking about it previously, but look at that divergence. You've got the yield spread between the Bund underneath the dollar, which is the way round that I'm looking at it, which sort of gives you a positive correlation with euro dollar. However, euro dollar is still going higher. That yield spread is widening, and that yield spread is widening because Bund yields are falling faster than treasuries. So, subsequently, is that divergence going to continue and break that uptrend? If that is the case, would that ultimately start to drag on euro dollar lower? Euro dollar has again pushed out to highs today, continues to move higher, but that is a divergence that is potentially a little bit of a concern for euro bulls. But anyway, something to definitely keep an eye on. So, what have we got to drive these markets today? Well, we've had there's actually probably the most quiet day of the week, really, for economic data, and we've had UK construction PMI actually disappointing. Look at that, 51.9, down from 54.5 expectation. That is not great, but it's only about 7% of the UK economy, so it's not all that disastrous, but still it's not great for sterling. And then this afternoon, what do we have? Well, nothing really apart from ADP at 185. Now, ADP has not really been a great indicator for non-farm payrolls in recent months. Certainly 158 on ADP last month, when payrolls came in at 222, wasn't great. It also overestimated payrolls, if you take it as a signal, the month previously. So subsequently, you might see a bit of reaction to ADP this afternoon, but not a huge amount. You've also got the EIA oil inventories. Now, the reason that the oil price fell quite strongly yesterday was on the back of the API oil inventories, which came in much higher than expected. A surprise inventory, a surprise inventory build on the API. So what will that mean for the EIA inventories this afternoon? 2.5 million barrels of drawdown expected on crude, distillates at 500,000, gasoline at 1 million. Drawdown across the board, but will the API inventories be a harbinger? Maybe they could suggest that the EIA inventories are going to be higher than that. Subsequently, the oil price has fallen away. So that takes me to my chart today, which is the Aussie. This is another sort of chart that I'm going to be sort of focusing on, because the Aussie, sorry, that's gold. What am I doing? So, but the Aussie has started to sort of roll over a touch, hasn't it? This uptrend that's taken the Aussie strongly through 0.8 figure is just starting to roll over, isn't it? Is that sort of the beginning of a corrective move? You've seen the momentum indicators losing impetus. You've seen the RSI below 60. That's the first time that's been for 3 weeks. The MACD line's beginning to cross. Are they about to cross lower? The stochastics also close to crossing lower. So we've broken that uptrend today. Initial support for that is 79.33, which is that late, what's that, Friday's low, which arguably completes a little bit of a top pattern. 79.33, if that were to be broken. That was tested this morning but held. But if that again falls away to break to the downside, that would certainly suggest this low at 78.75 would then come under pressure, and that is when we start to see the key support in this recent sort of run of the last 2 or 3 weeks, and that would be tested. Now, likelihood is that if we see the RSI below 50, that would be certainly corrective, still in the high 60s. So we're just sort of consolidating at the moment rather than decisively corrective, but I think 79.33 would be an early signal of a possibility of a retracement move on the Aussie. So certainly something to watch out for. You've got resistance, little bit of a late afternoon resistance, 70, around 80 figure, really above the, and then above that 80.42 being that reaction high from yesterday. But certainly the bear candle we saw yesterday starting to sort of, yeah, I mean, I think it's certainly losing, has lost the momentum of the rally, but it'll be interesting to see if this consolidation turns into a correction. So with that in mind, I wish you good luck in your trading, and I'll speak to you later. Thank you.